Ladies and gentlemen, good day and welcome to Punjab National Bank Q4 FY25 earnings conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Palak Shah. Thank you and over to you, ma'am.
Hello everyone and welcome to Q4 FY25 earning conference call of Punjab National Bank. Today we have with us the entire management of Punjab National Bank headed by Mr. Ashok Chandra, MD and CEO, Mr. Kalyan Kumar, Executive Director, Mr. M. Paramasivan, Executive Director, Mr. Bibhu Prasad Mahapatra, Executive Director, and Mr. D. Surendran, Executive Director. With this brief introduction, I would like to hand over the call to Mr. Ajay Singh, General Manager, to read out the disclaimer statement, post which MD Sir will address the conference call. Thank you and over to you, sir.
Good afternoon, everybody. The disclaimer, this representation contains certain forward-looking statements apart from historical information. These forward-looking statements involve a number of risks, uncertainties and other factors that could cause actual results to differ materially from those suggested by the forward-looking statements. Punjab National Bank undertakes no obligation to update forward-looking statements to reflect events or circumstances after the present date. Thank you.
Good afternoon. I am Ashok Chandra, MD and CEO of Punjab National Bank. I will just give the snapshot of our performance for financial year 24-25. First, I will touch the business performance. Global gross business of the bank stood at 26.83 trillion as in March 25, with yearly growth rate of 14%. The global gross deposit stood at 15.66 trillion with a YOY growth rate of 14.4% and global advances stood at 11.17 trillion with a YOY growth rate of 13.6%. We are well above our guidance for deposit as well as the credit growth rate, which was 9 to 10% for deposit and 11 to 12% for credit. CD ratio of the bank is comfortable level at 71.28% as on March 25. Profitability performance, coming to the profitability numbers, the net interest income stood at 42,782 crores with a YOY growth of 6.7% for financial year 24-25. NII has reflected marginal dip in Q4 on account of immediate impact of policy rate cut on asset side. Our domestic NIM is at 3.08% for financial year 25, whereas the global NIM stood at 2.93%. We are in line with our guidance for NIM at 2.9 to 3% for financial year 24-25. The operating profit for the financial year 24-25 is 26,831 crores, which has improved from 24,931 crores in financial year 23-24 with a growth rate of 7.6%. Our quarterly operating profit is 6,776 crore, which has improved from 6,416 crore in the same period last year with a growth rate of 5.6%. The net profit for the financial year 24-25 is 16,630 crore, recording a YOY growth of 101.7% compared to FY 23-24 at 8,245 crore. For the March quarter, net profit stood at 4,567 crore against the 3,010 crore in Q4 23-25 with a YOY growth rate of 51.7%. Key ratios, return on asset stood at 1.02% for Q4 financial year 25 and 0.97% for financial year 25, achieving the guidance for financial year 25. Return on equity is 19.23% for Q4 financial year 25 and 19.33% for FY 25. Highlights of our asset quality, bank has done very well under the entire NPA management and preventing the fresh slippages. As far as the asset quality is concerned, our gross NPA has reduced from 5.73% in March 24 to 3.95% in March 25. Similarly, the net NPA percentage, which was 0.73% in March 24, has improved to 0.40% in March 25. Guidance for net NPA was below 0.5% for 24-25 and we have crossed that guidance. The PCR of 95.39% in March 24 was improved to 96.82% in March 25, which is well above our guidance of more than 95% for FY25. Total fresh slippages during FY25 was 6,761 crore and 3,001 crore in Q4. Our guidance for slippages ratio was to remain below 1% in FY 2025. We are within the guidance and it is at 0.73%. The total recovery stood at 4,733 crore for Q4 2025 and rupees 14,336 crore for FY 2025. The credit cost stood at 0.21% for FY 2025 and 0.19% for FY 25, achieving our guidance of credit cost which is below 0.25 to 0.3% for current financial year. Capital performance highlights also about our capital. As far as the capital is concerned, the capital adequacy is 17.01% as on 31/3/2025 compared to 15.97% as on 31/3/2024. During Q2, FY25, bank raised equity capital of 5,000 crore through QIP, which increased the CET1 and CRAR by 65 basis points, which has subscribed by 8.3 times. During Q3, FY25, bank raised Tier 2 bonds of 3,000 crore and the Government of India's shareholding remains above 70%. Our CET1 as on today it is 12.33%, AT1 is 1.72% and Tier 2 is 2.96%. We have also taken the board approval for raising Basel III compliant AT1 bonds and Tier 2 bonds for 4,000 crore each. Highlights of our digital performance. Bank is doing extremely well in all the areas of banking, and we have improved a lot of digital penetration in all the critical areas. The bank is focusing on building digital capabilities under the domain of AI, ML, and analytics-based business generation. The same has yielded tremendous results for the bank. 94% of the transactions are getting conducted in the digital mode in our bank. The number of activated PNB One mobile app users stood at 2 crore 14 lakh as on 2.14 crore as on March 25 as against 1.74 crore as on March 2024. The number of WhatsApp banking users has grown by 115% from 31/3/2024 to 61.6 lakh as on 31/3/25. Sanction under the digital lending journeys were more than 23,169 crore and every fifth loan is getting sanctioned through the digital mode in our bank. We have onboarded 4.29 lakh CBDC customers and 62.93 lakh transactions done through the CBDC app till date. Further, mobile launched through corporate mobile banking app for the business people and we have added more than 99,000 customers on the app now. Almost all the digital lending platform, digital credit lending platform, we have brought the AI ML piece like PM Vishwakarma, Swanidhi, DG Surjaghar, and we are getting the good traction almost all the critical areas of the lending. If I touch the HR front, bank has adopted the new HR ecosystem driven by Project Udan. And in our bank, a lot of steps have been taken to bring the transparency in the transfer, in the performance appraisal, and overall in the ecosystem of the HR management. Last point which I would like to touch is that the officer or the employee who joins in our bank, their entire life cycle we are mapping up, and good leadership development programs are in place. International coaching federations, certified coaches are there. They are also giving coaching to our senior executives of the bank. So a lot of improvements and things, the transparency which we have brought in the HRMS side now. Finally, if I can conclude, focus area of the bank this year will be on the customer centricity and enhancing the ease of banking for customers. Focus on ambience of branches and the ATMs. Strengthening our presence in top 100 districts, having 66% of the CASA of the country. Focus on product and process improvements across the sector. Strengthening market share in the RAM, boosting non-interest income, optimizing cost, strengthening technology and setting up efficient data analytics center, robust cyber security framework and making organization ready for ESG and climate risk. Compliance and good conduct will be the core for the growth. Transparency in human resources, which I have already touched, and maximization of recovery and preventing the fresh slippages. These are the core areas on which the bank is going to work in the financial year 25-26. Thank you very much, and I'm ready for any discussion or any question, any clarity. If any of the parameters, if it is required, I am there, and my entire top management team is with me now. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruki Adjania from Nuvama. Please proceed.
Yeah, hello, good evening, sir. So I had a couple of questions. Firstly, if you see your slippage, then it's higher than what we've seen since Q1 FY24. So now will this be the normalized rate of slippage, or were there any one-offs? That was my first question, and I have a few others.
Yeah, good evening, madam. The overall slippages, if I can talk about, it is 0.73%. And the guidance which we had given for 24-25 was below 1%. So we are well within the guidelines. Of course, we have seen some slippages happening in the Q4, which is above normal. And mostly we have analyzed those slippages, and that has happened in the agri and the MSME segment. And in the agri and MSME segment also, the slippages which has happened, it is below 10 lakh segment. So we have strengthened our system now, and already in this particular month, April itself, we have made a recovery of around 288 crore out of those fresh slippages which has happened in the Q4. So I think definitely we will be maintaining the slippages ratio which we have given the guidance this year, that below 1% will be the slippages ratio. And the 3,000 crore slippages which has happened in the Q4, definitely that was an outlier. And going forward, we are expecting that quarterly our slippages will be in the range of around 1,500 to 1,700 crore.
Okay, sir. So, and my other question is that, a lot of banks have given many details about one big loan transfer to NARCL. So how did that get affected in our books? What were the entries like ICICI, Axis? All of them have given details on how much has been reversed through provisions, if there was anything in interest income that has been taken, the amount, etc. So if you could just explain, because that's a lumpy account, right? And it's public, like everyone knows which account has been transferred to NARCL, that way.
Correct, madam. See, what happened in the financial year 24-25, through NARCL, we have made a recovery of 458 crore in the last quarter, and in the Q4, which is the account which you are talking about, and 863 crore total recovery which we have made through the NARCL.
Okay, but so that has been shown as a reversal of provisions?
Yes, madam.
So, and has there has anything gone via the...
That is the reason, madam. If you see, our recovery in the technical write-off is in this quarter, Q4 is 1,800 crore. And if you see our recovery in the Q3, it was 763 crore. So there has been significant improvement in the TWO recovery in the last quarter. And it is because of that one big account recovery.
Okay, but that was, you said it's only 458 crore. That way, right?
Yeah.
So,
Yes.
Okay.
Correct.
Okay, and that has what has gone through the other income line?
Yes, madam.
And nothing has gone through the interest income line, right? NII line, right?
NII, the total, the NPA recovery through that NII route is around 700 crore.
Okay, and last quarter it was how much, sir?
Last quarter also, see, every quarter, around 600 to 700 crore, it goes in the interest income through that recovery channel.
Okay, sir. Sir, and I have just one last question on margins. So our margins did decline
a lot in this quarter for reasons explained, right? But that there was a repo rate cut. But also, sir, the deposit cost has gone up a lot. Would that be because of your special deposit schemes? What explains the rise in deposit cost, like the deposit cost that you show in the preso?
Yes, yes. I think that was one of the reasons. We had one special deposit scheme. But what I feel now, with the declining scenario of the deposits and the credit, I think definitely the cost of deposit, which have already it is reached at the peak level, I think we are going to bring it down now, because already we have withdrawn that special deposit scheme which was there, and the different segment also we are going to revisit our deposit rate, and maybe some corrections we will be making in the deposit front. So I am expecting that from the Q3 onwards, definitely that impact will be visible on the NII and the NIM front.
Got it. But in Q1, it's likely that NIM can fall.
It will be.
That way?
We will not fall. We will remain in the same level, because the deposit cost is almost bottomed out now. And the going forward, I don't see any rise in the cost of deposit. Rather, the deposit cost will come down. So Q1 mostly we will be at the same level, but definitely going forward, Q2, Q3 onwards, we see improvement in our NII as well as the NIM.
Okay, sir. Thank you. Thanks a lot.
Thank you, madam.
Thank you. The next question is from the line of Ashok Ajmera from Ajcon. Please proceed.
Good afternoon, sir, and congratulations
Ashok.
to Raji and the entire team of PNB. You are firing on all the cylinders, because
Thank you.
The business growth is phenomenal, 14% looking at if you compare with the other bank, and especially the credit and deposit growth, of course, which has led to the higher business growth. Your deposits are 4.47, which is, I think, growth is one of the highest. And even the credit growth also is 13.6%. Though in this quarter it is only 0.6%. On the whole, fantastic performance on all the fronts. Now, having said, most of the public sector banks also, including even State Bank, has also declared the result. And everywhere we have seen that there may be, first of all, they have moderated their targets for the credit. Like a bank like largest bank has also reduced the credit target from 14-16% to now 12% in FY26.
Yeah.
You are going very strong. So going forward, sir, for FY26, and especially in this quarter, which is going to be a lean quarter. Even just now we finished Bank of Baroda analyst call also in the morning. So there seems to be some pressure, especially in this quarter also, the current quarter. So, sir, going forward, where do we stand, sir, in PNB? Because excellent performance, and I think all past legacy, all negative things have gone. And the banks have started performing very well on all fronts, sir. So this is the first question, sir. That how do you see going forward the business growth, deposit, credit growth, and from where it is going to come?
Thank you. Thank you, Ajmera Saab. And if you can talk about the growth, see, credit growth, already we have given the direction that 25-26 also we are going to grow at a rate of around 11 to 12% in the credit, and the deposit also around the 10% growth which we are envisaging, and definitely we are going to achieve that. Rather, we will cross the projection which we are giving now. And why I am talking about the growth, the reason is that 1,15,000 crore sanctions are already there with us. There are disbursement which is going to happen for the loan sanction in 24-25 is around 85,000 crores. And in this financial year, like from 1st April till today, we have given a sanction of 28,000 in the corporate book. And this I am talking about the corporate book only, where we have given the sanction. And the 28,000 crore which we have given the sanction, that disbursements are also pending now. So I am expecting that 1,15,000 crore of sanction which is already there, definitely that disbursements are going to happen in the Q1, Q2 and Q3 onwards. Then there are another 21,000 crore of the new business group proposal, NBG we call it. Already we have given the approval, and for that we are waiting for the proposals to come, and then we will give the sanction. So we have 1,35,000 crore of corporate book in place, and I'm expecting with this, at least 50% disbursements are going to happen. With that itself, we will be able to grow at a speed of more than 10%. Now, second initiative which a bank has taken about the retail agri and MSME segment, and if you can recall that a lot of initiative bank had taken in the month of February. We had 6th and 7th of February, we had launched an outreach campaign for the housing loan and the retail activity. 13th of February for the MSME, and 1st of March, which we had done for the SHG and the agri. And all those things have done very well, and because of that, if you see, our RAM sector has also grown at a speed of 16 to 17% in different segments. So we are going to push this RAM segment very high now, and I think there also the growth in all the retail, agri and MSME, I am expecting that there will be a growth of more than 15 to 16%. So all things put together, I am expecting that the entire credit growth in the bank will be in the range of more than 12%.
Point well taken, sir. Sir, you are the master of recovery, especially in one of the, your parent bank. You did excellently, performed. So on recovery front, sir, now recovery, normal recovery and recovery from return of accounts. Would you like to give some color on that for FY26 and especially in this coming 1 or 2 quarters? And coupled with the decision of the Supreme Court on Bhushan Power and Steel, how do you see it affecting those recoveries which have already taken place? And where do we stand on that, sir?
See, overall recovery in the Q4, if you see, we have more than 4,700 crore of recovery, and in that 1,800 crore has come from the technical write-off. And if you can recall, during the analyst meet in the month of last quarter, I had already indicated that there will be around 15 to 1,600 crore of technical write-off recovery will happen, and our overall recovery in the Q4 also, we had projected that 4,000 to 5,000 crore of recovery will happen, and that we have done it now. Team has made it possible. Going forward also, I can give you the color for that. Around 16,000 crore of recovery I am expecting in the financial year 25-26. In that, the technical write-off recovery every quarter, I am expecting that minimum 1,500 crore will happen. So these are the projections which I am giving, and that is in line with the guidance which we have given to the analyst.
What is the total write-off book, sir?
Total write-off book, it is around 92,000 crore.
92,000 crore. So we expect about 6,000 crore. So about 6 to 7% of the total book, maybe 5.5 to 6.5%. That's very good, sir.
This is a minimum which I am talking about. That's the minimum recovery that is going to happen. See, this 91,000, 92,000, the book which we are holding it, in that there are very, very crude assets are also there where we are not going to expect much recovery in that. See, there are things which has gone in the liquidation also. So all put together, it is 91,000 crore. So, but actual recovery which is going to happen is almost out of 50% of that only the recovery is going to happen. And there we are going to recover around 6,000 crore.
So 10%. Yeah. So, sir, next is on the NARCL. Like SRs issued by NARCL, which is government guaranteed. Now, as per RBI directive, you can value it at the fair value. So, how much profit have we taken on that on SRs issued by NARCL till date?
It is
in the last quarter.
Yeah, it is around 1,200 crore.
Which has gone straight to the bottom line, sir.
Yeah, and that has been neutralized with the MTM which we have done in the treasury.
Okay. So earlier, whatever MTM was done.
Yeah.
And last question, sir, in this on the treasury front, now since the treasury is giving phenomenal income, and now also at least 2 rate cuts, everybody is agreeing up to 50 basis points coming from RBI. So going forward, we will have a phenomenal, tremendous income from treasury book. So any color on the treasury operations for FY26? And with this kind of windfall which will come in, how do you look at it, and how good it will affect the profitability?
I think, understanding the rate transition which was going to happen in the month of March and the June, we have built up a good treasury book now, both SLR and non-SLR book also. And we are going to get good dividend out of this investment which we have made in the treasury now.
And sir, how much M2M profit has gone from the AFS book, which has gone directly to the reserve?
You have that data? Just 1 minute. Our CFO is here. Yeah.
No, he's talking about the original valuation we have done.
AFS market profit from AFS book, which now as per RBI valuation norms, revised valuation norm, goes to reserve, AFS reserve. What is that figure, sir?
Just 1 minute. We'll give you.
So we have created 2 things. One is about the general reserve, which is 2,098 crore, and AFS reserve we have done 379 crore.
379 crore.
Will you repeat that second number, sir? 300?
First number is 2,098 crore in the beginning at the time of transition. And for during the entire year, we have done in AFS reserve 379 crore.
379 crore
for the entire year.
Okay, sir. Okay, sir. Thanks a lot. Any time permits, I will come back again, sir. Thank you, sir. Thank you, and all the best, sir.
Thank you. Thank you, Andhra.
Thank you. The next question is from the line of Jay Mudra from ICICI Securities. Please proceed. Hello, sir.
Hello. Yeah, hi. Am I audible now?
Yes, Mr. Jay.
Yes, hi. Good evening, sir. Sir, I wanted to check what is the amount of wholesale deposits that we have?
Willful.
Wholesale deposit.
Wholesale deposit, sir.
Wholesale deposit.
Yeah.
Okay. The total amount is, that is more than 3 crore.
More than 3 crore वाला कितना है? 5194.
2,80,000 crore. Yeah, including CD, it is 2,80,000 crore.
Right. So, sir, in your entire deposits of 15 lakh crore, right, roughly, we will take, let's say 3 lakh crore is such which will reprice on a faster basis, right, which is only 20% of the overall deposits. Whereas on your loan book, you have very high proportion, which at least, let's say the loans which are linked to EBLR and T-bill, which is roughly 50% or over 50% book, which will reprice or which have already started repricing. Right. So in that context, you could have significant margin pressure, right? I mean, this quarter margin, I mean, the margin for this quarter ending is 2.81 global margins, and we are saying that full year we should be around 2.2 with 2.9. So it looks like that may be very optimistic aspirations.
The total term deposit also which we are holding it, there is a percentage of the deposit for more than 1 year is also not very high. So we are expecting that the deposit which is there for 3 months time, most of our deposits are in the range of 6 months to 9 months. And that is the reason I am telling also that our pressure on the cost of deposit will bottom out, or it will come down from Q3, Q4 onwards. So till Q2, definitely there is going to be some pressure, but at the same time, the cost of deposit which is there as of now, that is not going to be up now, because that is the highest level we have reached now. Now, under no circumstances, this level is going to up, because the deposit rate scenario is already it is down now, and we are expecting that whatever the new acquisition that is happening in the system, that is far below the rate which we were prevailing earlier. So, keeping that in mind and the long-term impact of the deposit which is there in our system, I don't see that in the long run we will have any pressure on our NII and the NIM.
Okay. So, sir, actually, let me ask you, we have already passed on the repo rate cuts, right? I mean, so this quarter till March end, you would have passed on some impact of the Feb 4 repo rate cut on the loan side, right? So now, sir, let us say if in cumulative there are 100 basis point of rate cut, what is your sense that your yield, your blended yield on advances, how much should it decline? Should it decline by, let's say, 60 basis point on a, let's say, from fourth quarter to maybe fourth quarter? By that time, 100 basis point, so 100 basis point of repo rate cut, what should be the blended decline in your loan yields, assuming everything is more or less static?
I think we need to go deep into that, and we need to do some calculation for that, and then only I can throw the figure to you. Because we will have to factor those things, and then only we can calculate. So I think we can discuss with you separately, and we can give you the entire calculation. What are the RLLR is there, MCLR is there, and how it is going to be if the further 50 basis point rate cut happens, how it happens now. I think we can have one-to-one discussion, and I can share all those details to you.
Sure, sir. And sir, is there any strategic discount that you offer to your customer, which contractually you can reduce that? Is there such mechanism, or you think more or less the EBLR linked loans will have a complete pass through?
No, I didn't get that question.
So let's say I'm saying, sir, on your loans which are linked to EBLR, so far RBI has cut by 50 basis points. Let us say RBI also cuts by another 50 basis points. So there is a 100 basis point cumulative cut. Do you have any contractual mechanism wherein you may choose to pass on only 75 basis points, saying that you are increasing the spread or you are reducing the strategic discount that you would have offered to those customers? Or it will be simply more or less 100 basis point pass through to at least to the EBLR customer. MCLR and all those things may change.
See, more or less, where it is straight away, the rates are fixed with the EBLR, definitely we need to pass on when we are passing on that benefit. But there are certain schemes in the retail segment like housing loan is there and vehicle loan is there, where we have given some strategic discount. There we can revisit if the further rate cut happens. Then a strategic discount which we have given because of some campaigns we are launching it. So we are giving further discount in our RLLR. There we will revisit and we will find out what best improvement can be done now. But wherever the straightaway methods are there, where RLLR based the lendings are there, definitely when we are reducing the because of the repo rate, we have to pass on this benefit to all these people.
Right. Understood. And lastly, sir, I could not understand the security receipts treatment. So we had 1,200-1,300 crores of security receipts which were, above the book value of 1,200-1,300 crores. So that should have been in PNL, right? You said that you have neutralized that gain by MTM. So if you can just explain.
Ask my CFO to explain it to you.
Mudraji, I think you are correctly observed, but we have taken the entire benefit of this in the revaluation of this entire SRs. We have either released the provision or we have revalued the NAV value. So this amount is 1,326. But what impact we have done, we have another securities where we have some MTM losses as well. So those we have provided, especially one of the big investment we have. So the net result is reflected 182 crore positive in the P&L, sir.
Okay, understood. Thank you and all the very best, sir. And I'll engage you, sir, on separately for this yield sensitivity.
Definitely, this we will come out. Yeah.
Thank you. The next question is from the line of Kunal Shah from Citigroup. Please proceed.
Yeah. Hi. Sorry. So again, to clarify on this SRs, this 182, which is the profit on revaluation of investments, that is the net amount which is getting reflected after 30 crores of credit coming from the government guaranteed SRs. So there would have been some knock of 1100 odd crores which would have been taken, 1150 odd crores on M2M on other SRs. So that's right?
Yes. Yes. Absolutely right.
Okay. Okay, perfect. Got it. And secondly, coming on to this deposit question again. So you mentioned like this were largely the special deposit schemes which have now been withdrawn. But what was the tenor of these deposits? And I think maybe just prior to the rate cut, we have contracted them at a very high rate. So what is the average tenor of particularly the special deposit schemes, special deposit rates which were offered? Yeah.
It was 400 days deposit at.
So that will at least take like 1 year to reflect.
Yes. That's the reason I'm telling that impact of this rate cut in the deposit will take at least Q3 onwards, Q4 onwards, only we will see the impact.
Yeah. Got it. But still, like maybe for 400 days, so it will be almost like more than a year. And given that this was on for almost like last 4 months, it will take a slightly longer period as well. Yeah.
Yes.
Yeah. And getting on to the SME slippages as well as agri. So no doubt you indicated, but there is a sharp increase which is there in both of that when we look at it on a 9 months and the full year number. Particularly agri also a sharp rise in SME. These are like less than 10 lakh rupee loans as you indicated. But any color in terms of where this is flowing from? Is it like the area of stress and the initiatives which we are taking to manage this going forward, and this will not repeat, or this will be contained at the current level?
No, I am very confident that the level which you have seen, I think that is the maximum level it has touched. It don't cross the limit which has happened in the Q4. Because in agriculture, if you see the March quarter itself, it was 1,400 crore. And that is the highest it has happened in the last 1.5 years. And there is a maximum it has happened.
Which product segments, particularly this 1,400 crores, which like within agri, which is this product segment which is contributing to the maximum pain?
These are all the KCC loans, and in that there was some repeated restructured loans were also there. So we also didn't allow to do anything in that. So we allowed to sleep it, and then we can do the recovery measures also. And in the first month of the 25-26 itself, we have made a recovery of around 288 crore. So, and that is the highest level it has happened. It is not going to happen in the Q1 or Q2 onwards now. And this quarter, I have already given the direction that it will be around 1,500 to 1,600 crore will be the total slippages going to happen now.
Okay. Got it. Perfect. Yeah. Okay. Thanks and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Vinit Jain, an individual investor. Please proceed.
Hello.
Yes, Vinit.
Good evening, sir. सर आवाज आ रही है मुझे?
Yes. बोलिए.
सर जो भी मैं आज भूषण स्टील का जो सुप्रीम कोर्ट ने कल डिनाइल किया हुआ है JSW स्टील ने जो उसका एक्विजिशन किया था, सर उसी के बारे में मुझे जानना था सर. उसका सर क्या इम्पैक्ट रहेगा सर PNB के ऊपर? मतलब हम क्वार्टर 2 या क्वार्टर 3 में उसको सर डिस्काउंट करना पड़ेगा जो भी हमने NPA में हमने कवर किया हुआ था सर, उसके बारे में जानना था सर मुझे.
नहीं, अभी तो इसके ऊपर 2-3 दिन के भीतर जितने भी लेंडर हैं, अराउंड 32 लेंडर्स इसके भीतर हैं, तो वो सारे लेंडर्स COC की एक मीटिंग होने वाली है 2-3 दिन के भीतर. एंड देन फ्यूचर कोर्स ऑफ एक्शन जो भी दी लॉ ऑफ द लैंड है उसके भीतर जो भी सोल्यूशन है हम इसके ऊपर विचार करेंगे, एंड जो भी बेस्ट सोल्यूशन होगा उसके ऊपर हम काम करेंगे. एंड दी एसेट इज इन द वर्किंग कंडीशन. आई डोंट सी एनी चैलेंज इन द फ्यूचर ऑल्सो एनी रिकवरी मैकेनिज्म.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Ashlesh Sonje from Kotak Securities. Please proceed.
Hi, sir. Good evening. The first question is on asset quality, especially on the recoveries part. You indicated you guided for a recovery amount of about 16,000 crores for next year, against a recovery of about 14,300 crore, which you have done in this year. So what changes next year, sir, that you are confident about a higher recovery?
See, one thing which is, if you can see in the recovery in the Q4, where we put a lot of focus and the drive happened across the bank, and we have seen the recovery of 4,700 crore, which is highest in all the 4 quarters. In the recovery under the technical write-off itself is around 1,800 crore. So that gives a lot of strength to us, that is, if we can put focus, and the head office and the circle office and our general office, if they start monitoring the account on a regular basis, connecting with the NPA borrowers, I think definitely this number is achievable and we are going to achieve that.
Okay, just a follow-up, you are not assuming any big chunky recoveries from your side?
Chunky assets are not there now. I think all the recovery will be in the range of around, smaller accounts, definitely there are plenty of accounts are there, and around in the range of around 25 to 50 crore, plenty of recoveries are going to happen. Okay.
So secondly, on the margin front, on the housing loan front, you seem to be growing that book quite well. And it seems like PNB is offering a rate of interest of about 8%. Given the expected pressure on yields due to the repo rate cut, is it possible that you might consider a hike in the interest rate on the housing loans?
This rate, as of now, what we are giving, will continue for that, and then we will see what further repo rate cut happens, and then the discount which we have given over the RLLR. I think we'll revisit that, we'll see that. As of now, we don't have any plan to do that. See, housing loan, generally we give this rate with a provision that the team of our bank will connect with the people, and along with the housing loan, a lot of other things also come into kitty. Their personal account also come, and once that personal account comes, then a lot of other lending activity also happens. So this is not the standalone we should see the interest rate in the housing loan.
Just one clarification. When do you expect the MCLRs to decline for the bank?
MCLR, one cut we have already given, and 10 basis point cut has already happened.
Okay, sir.
That is from 1st of May. 1st of May.
Sir, sorry. Yeah, sorry. One more question. On the tax rate change, when do you anticipate that? Anything in the pipeline?
Which one?
On the tax rate.
Tax rate.
Shift to the new tax regime. Yeah.
This financial year, definitely, we are going to adopt the new tax rule now.
Okay, sir. Perfect. Thank you.
Mostly by Q1 or Q2. By Q2, definitely, the new tax regime will be in place.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Rakesh Kumar from Valentis Advisors. Please proceed.
Yeah, hi. Thanks, sir. So a couple of questions, sir. Firstly, you were discussing on the deposit cost number, that, there is an acceleration because of a special deposit scheme. But if I look at your reported deposit cost number, it was close to 5.1% in first quarter. Increase was 8 bips in the second quarter and then 6 bips. And then all of a sudden in this quarter, 12 bips. So it doesn't seem that, it is just because of, a special deposit scheme what we had and what stands withdrawn right now. But still we have seen 12 bips increase in the deposit cost. So is that there is a large, mobilization that we did in third quarter? Is that the reason? Or there is some other reason why the deposit cost has increased by around 12 bips this quarter?
Yeah, that is also one of the reasons. So there was some bulk deposit and the CD was mobilized in the third quarter, and that impact also we have seen. but we have reduced the CD in the this particular quarter. Almost around 10 to 12,000 crore of CD we have reduced in this particular quarter itself. And that is one of the reasons, if you see the quarter-to-quarter deposit growth is slightly lower than the earlier quarter now. So we are mindful of taking the deposit at a reasonable cost, and I don't see going forward any further increase will be there in the cost of deposit.
It looks very contrary, sir, that, we have a credit growth of 0.6%. There is no credit growth actually in the, domestic credit growth on a sequential basis. And as you said that, we have kind of ceded some, high cost, maybe the bulk deposit. If we are ceding the high cost bulk deposit, actually, something reverse would have happened on the deposit cost number. But still with this kind of balanced growth, we are, reporting with a 13 bips decline in, increase in the deposit cost, margin decline of around 12 bips. Numbers are not fitting in completely. So I don't know what is missing here.
In the deposit, see any impact, suppose we have mobilized some low cost deposit in the month of February and March. The impact of that cost of deposit will be visible only after Q2 and Q3 onwards. Because there are deposits which we have taken for 1 year period, 9-month period. So actual impact will be in the Q2 and Q3 itself. Because all the low cost deposit which we have mobilized in the March and the now also, that actual impact will be happening only after the Q3.
Okay. And sir, if you look at total accumulated provision number, we had around, 66,000 crore in the March 21. Now we have accumulated provision of around 40,000 crore. Return of loan outstanding remains the same. So obviously the, the propensity or the resources what we have to do the recovery from here on, that has come down drastically. So one thing is that what is the interest income accrual that we have done from NPA recovery and TWO recovery in this quarter and this year, and how that number will pan out in 26? Because the recoverable pool has come down, quite, sizably. So if you can throw some light.
See, the technical rate of recovery in Q4, it was 1,800 crore. And overall total recovery in the Q4 was 4,700 crore. That is the total recovery we have done.
I was asking, sir, of the total recovery, NPA recovery or TWO recovery, what is the interest accrual that we have done?
I'm telling you. I'm telling you. So 1,800 crore is a technical write-off. Other than that, 700 crore every quarter, 600 to 700 crore, recovery goes in the interest. So any recovery which we are doing it in every quarter in the NPA account, around 600 to 700 goes to the NII.
Okay.
And we are also projecting that going forward also minimum 1,500 crore of technical recovery will happen in every quarter. And we are projecting that total recovery will be around 16,000 crore in the entire year, in 25-26.
Got it. And the interest income accrual ratio will be the same kind of?
That is the same. That is the trend which we are seeing it for the almost last 6-7 quarters. 600 to 700 crore it goes in the interest income.
And considering, sir, that the provision that we have taken for employee expenses this quarter and for this year, what is the discount rate assumption that we are working with now?
6.7.
When we talk about this government bond rate 10 years, plainly, what is applicable to the public is 6.57%. What is it? This is closed on 31st March 25. That was the base to decide all this. 6.57. We closed
6.57. This is by our CFO, Mr. Jan. Yeah.
Okay. Got it. For gratuity pension both.
Yeah. This is the base rate. There is the actually decide the date decide on the FIMDA and everything. Civil date.
Okay. And the PBU and the plan asset numbers are broadly same for pension.
Yeah, we get the PBU number and then any difference we provide for the current quarter.
Correct. Thank you, sir.
And I can tell you that sufficient provision has been made in all the pension and gratuity.
No, I am also quite delighted that, what you said, or the previous MD said that, kind of provisioning they were doing for S15. We did not see any jump in that number in Q4, so that is quite commendable.
Yeah. We planned for the entire year, and then you could have seen that we are doing it in a very proportionate manner. We have foreseen all these changes, and then we have provided without taking any big hit in any particular quarter.
Correct. Thank you. Thank you, sir. All the best, sir.
Thank you.
Thank you. The next question is from the line of Gaurav Kochar from Mirae Asset. Please proceed.
Yeah, hi, sir. Good evening. Am I audible?
Yeah, good evening.
Yeah. Sir, I have two questions. First is, again, sorry, harping this on margins. Sir, you mentioned that in the first half at least there would be some pressure on margins. You exited the year at 2.81 in the fourth quarter. So is it fair to assume that in 1H your margins will be lower than this, and in the second half you may recoup back to this 2.81 number that you reported in the fourth quarter?
First half we will be in the range of 2.8 to 2.9. And going forward, definitely we will be trying to reach it between 2.9 to 3%.
Okay. So, sir, assuming that we have only passed 25 basis point in this quarter, and that too from February when the rate cut happened, there would be further, repricing of that, plus the additional April month 25 basis point repo rate cut that we will be seeing. These are the two right now which we have already seen. But if there are further rate cuts, that will also have impact on the 1H and as you mentioned, sir, your deposit repricing will happen with a lag. So what would result in NIM expansion from here? So 2.81, if you're saying we'll maintain this, what will offset the pressure on the yields?
Slightly, definitely, yield will come down because with the downward interest rate scenario, definitely yield will come down. But at the same time, I am expecting that my deposit rate and the cost of deposit will also come down. We have already revisited our deposit rate, and going forward also we will study the market because liquidity is enough in the system now. And if any further rate cut happens, I think we will review our deposit rates once again, and we will make some corrections in our deposit rate. And all these things, the impact we will be able to see from the Q3 quarter onwards.
Okay. Okay, got it. And just my second question was with respect to the overall ROA guidance. You mentioned that 26, you want to make ROA of more than 1%. So just trying to understand, based on your guidance, the margins will fall by around 10 basis points. And this year we had revaluation of investment, SR recovery, etc., which may not recur in the next financial year. Also, the credit cost in this year was 19 basis point, and you mentioned for next year you are seeing less than 50 basis point. So therefore there could be some increase in credit cost. So and this year we made a ROA of 0.97. So assuming your sort of numbers, that also keeps the ROA lower, less than 0.9. So what will drive the ROA expansion from here? Is there anything else that you believe could drive ROA from here?
Always there will be something in the PT which will going to help now. One is recovery from the technical write-off, which we are going to drive it in a very, very big way. Last year, the technical write-off recovery which we have made, this year already we are projecting that every quarter we are going to make a recovery through the technical write-off is quarterly it will 1,500 crore. So with this itself, we are going to raise around 6,000 crore, which is going to directly to my operating profit. Second, our investment book and treasury has become very, very strong. We were understanding that the rates are going to come down. So we have built a good volume and good book of the SLR and non-SLR. And the recent OMO operation which is happening, in every OMO operation we are making good profit now. So the treasury income and the recovery through the technical write-off, I think that is going to play important role. Overall recovery also, since our total the the provision coverage ratio is more than 97%, and the tangible PCR is also more than 90%. So today, other than TW also, whatever recovery we do, it is going to help us in the write back of provision. So these are the things which is going to help us in this financial year in improving my ROA.
Understood. Thank you, sir. That's all from my side. All the best.
Thank you. The next question is from the line of Bhavik Shah from InCred Capital. Please proceed.
Yes, it is okay, madam.
Can I take the next question?
Yes, madam, please.
Okay. The next question is from the line of Apurva from MS. Please proceed.
Hi, thanks for taking my question. So just a data keeping question on if you could help me with the SME 1+2 loans below 5 crores.
SMA book.
Yes.
You want 5 crore and above?
Less than 5 crores. If you could help me with the SMA 1+2 number.
Less than 5 crore in percentage term. Total it is there. What is the percentage? Around 6%?
6.79 total.
6.79%.
Total SMA by total gross credit is 6.79%.
So 6.7 is our total percentage for all the loans put together.
Okay. And
yeah.
What would be the SMA 1+2 number? Could you give me
SMA 1
22 to 828.
1 and 2 figure, madam?
SMA 1 is 22,828.
Percentage?
Percentage I have to calculate.
No problem, the number works. So SMA 1 is 22,828.
SMA 1 is 22,828 crore. SMA 0 is 49,689.
Yes.
And SMA 2 is 3,279.
Okay, thank you so much, sir.
Thank you. The next question is from the line of Pyron Engineer from CLSA. Please proceed.
Yeah, hi sir. Congrats on the quarter. Just a couple of questions. You mentioned that 1,300 crore SR, you mentioned some breakup, 458 crores and 863. Can you just once again repeat wo kya tha? What is 458 and what is 863?
See, 1,325 crore, the SR, we got it to our books now. And there was one account where we need to make the M2M provision. So that amount was around 1,100 crore. So we have netted from 1,300 crore to 1,100 crore, and that is the net impact we have given in our income.
Hey, that I got, which is 182 crores. But आपने 458 crore का number दिया और 863 crore का number भी दिया. I think one went into other income and one went into, I think 863 went in.
No. That is a recovery through the NARCL. Recovery through NARCL for the Q4 was 458 crore, and overall in the entire financial year recovery was 863 crore. That I was talking about.
Okay. But this is not to do with that one large account that we are all referring to.
Yes.
Okay, understood, sir. And also, what sort of OPEX growth are we expecting for FY26 versus FY25?
Guidance is
Yeah, guidance, like OPEX growth for FY26.
See, I can tell you we have given the guidance for our 14 parameters. Okay. So credit growth we are expecting around 11 to 12%. Deposit growth, we are expecting 9 to 10%. And if I come to the operating profit, that is 8 to 9% we are expecting. Net interest income 7%, NIM 2.8 to 2.9%. NPA percentage-wise, if I can tell you, gross NPA we are projecting below 3% and net NPA 0.3%. CR already we are at around 95, 96%, so we will be maintaining this level. Credit cost below 0.5% and ROA above 1%. Slippages ratio below 1%.
Okay, so this was very useful. Thank you so much and wish you all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Nalin Shah from NVS Brokerage. Please proceed.
Hello. Actually, it's Kriti Tripathi from NVS Brokerage.
Yes, ma'am.
Yes. First of all, congratulations on the superlative FY25 performance. Just wanted to ask two questions. First is that given such a strong performance in FY25, and although you have been given conservative guidance, but the performance has been exceptional throughout the year. So can we expect an ambitious target for FY26 as well in the similar lines or so? And the second question is on the dividend front. So while the payout is appreciated, can we expect a more liberal dividend policy going forward given the strong years like FY25? So just two. Thank you.
One is that guidance which we are given, we always feel that whatever guidance we give to the analyst and to the outside stakeholders, I think definitely we should be able to cross that guidelines. So that is one of the reasons we are giving the conservative guidelines, and we are very mindful of these guidelines, and we are going to cross this guidance this year also. Last year also we are given 11 to 12% guidance in the credit, and we have touched almost around 14% growth. Deposit also we are given 9 to 10% and we have crossed 15%. This year also we are giving the same guidance, but I am 100% sure that we are going to cross this guidance. Now to your question of the dividend, this year also if you see with a share of 2 rupees, we have given 2 rupees 90 paisa. Last year it was 1.5. So almost this year we have doubled. So we are expecting that next year again we will be showing a good performance. And definitely all the stakeholders will be rewarded.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ankit from AD India. Please proceed.
Hello.
Yeah.
Hello.
Yeah. Good
hello,
evening.
sir. Good evening, sir. Sir, my question is, sir, provisions are on very high side and also the fresh slippages. Sir, can you explain what will be the reason?
No, provisions are not very high side. Even the slippages also, it is overall slippages is only 0.73% the entire financial year. And provision also, you see, we are already at 97% under the PCR. So, and the credit cost, if you see, it is already very, very minimal.
Sir, it has risen from 3.9 to 5.9 according to the results, no? I think it's quarter and quarter or YOY? Quarter and quarter. And slippage is also from 1,700 crores to 3,000 crores.
That is correct. See, one particular quarter, this is a Q4, there has been some, the slippages have happened in the agriculture, particularly agriculture segment, and some MSME segment, some slippages have happened. And that is almost outlier. It will not happen in every quarter now, because last 2 years, if you see quarter to quarter, we have maintained the slippages in the range of 1,700 to 1,800 crore. And that is the thing which we are expecting in the Q1 onwards also. So that is one quarter where it has happened because of some legacy, some accounts where there are some 4 or 5 years back, some, I think, agriculture structured, repeated restructured accounts were there. So those accounts have slipped in this particular quarter. And in this slippages, already around 288 crore of recovery has already happened out of these slippages.
Okay. That's good. Sir, sir, are you seeing any stress in the economy? Likewise, according to this 4 or 5 year slippages or any new loans, are you seeing any stress? Environment, how is the environment in the business community?
No. I am not seeing any further stress in the system. And today, if you see my SMA book, none of the corporate accounts are appearing even in the SMA 0 also. Especially for the 50 crore and above accounts, we don't have any such account in that particular bracket. There is another one study which we have done from accounts which was sanctioned from 1st July 2020 till today. And what is the NPA that has happened? Almost around 9 lakh crore sanction has happened from 1st July 2020 to 31st March 2025. Total disbursement
Hello?
Yeah, I can give you. Are you connected now?
Sir, actually the participant line has been disconnected.
You can connect him. He wanted some clarification.
Yeah. Give me a moment. Sir, actually that participant is no longer in the queue.
Okay.
So shall I proceed or take that as the last?
Yes, sir. Yeah.
Okay. The next question is from the line of Aditi Nawal from RSPN Ventures. Please proceed.
Yeah, hi, sir. Thanks for taking my question. I just have one data keeping question. So if I look at the OpEx number for this quarter, especially the other expenses, so that is slightly on the higher side sequentially. So is there any one-off or is there any expense that you want to specifically call out?
No. Which part you are talking about? Which area?
Other
operating expenses. Okay. So you are talking about other operating expenses.
Yes.
No. Talking about other operating. So you are seeing from QOQ or?
So both actually, sequentially as well as year on year. So 2,500 odd crores going to around 2,900 odd crores.
You have sequentially 25. Some business initiative. It is not any abnormal things which has happened. It is the usual expenses that is there in the system. That is the thing which has happened. Not any unusual or any other thing which is there in the system.
So it's a normal BAU expense.
Yeah.
So this can be like the run rate going forward?
No, it will remain like this only. There will not be any much fluctuation. And these are the normal course of things. See, 400 crore in a year increase is not a very, very big thing for an organization like ours.
But even sequentially, there's a 400 odd crore jump there.
No. See, the Q4 of FY24, it was 2,565 crore, right? And Q4 of 25, it is 2,900 crore. So YOY variation is 339 crore.
Right.
Yeah, it is YOY variation.
No, so my point was that even in quarter 3, the other operating expenses was around 25-60 odd crores. So sequentially also there's around 350.
Sequentially also you are telling that 2,560 to 2,900 crores. Yeah.
Yes.
But overall things also it is almost in the same range, and it is not of any unusual entry. It is in the business cost and business running things. It is there.
Got it. Thank you so much.
Thank you. Ladies and gentlemen, I take that as the last question, and I would now like to hand the conference over to management for closing comments. Over to you, sir.
Thank you very much to all the well-wishers of our bank and all the stakeholders of our bank. Please repose the faith in our bank. And on behalf of the entire PNB team, I can assure you that going forward also, we will see the same momentum in all the business areas of the bank, and there will be qualitative improvement in all the ratios. So thank you very much once again.
On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.